Hi everyone, welcome back to my channel. Welcome back for those persons who are always here with me. Welcome to all new persons. Please remember to like, share, and leave a comment down below. Alright, so for this lesson, I want to do a short lesson to look at some multiple choice questions, some accounting multiple choice questions. So over the years that I have been teaching, I have worked and looked at specimen papers, multiple choice specimen papers. I have also looked at and work different multiple choice questions in various accounting books. I too have also developed some multiple choice questions of my own. Now, these questions that I'm going to work for you is in line with the syllabus, the topics on the syllabus, and will help you to prepare for your paper one, your principles of accounts paper one. So let's get right into it. Our first question here asks us, which of the following statement is incorrect? The key to multiple choice is that you ensure that you read your questions properly. You want to ensure that you understand what the question is asking. So here it is asking us, of the four statements, which of them is incorrect. And the key to multiple choice too is that they normally highlight that area that they want you to pay attention to. It's either highlighted, it's bold, or it's in italics. So once you see that highlighted area, you know that that's where you should zero in on. That's where you are expected to pay most attention to. Now, we remember the accounting equation, which states that assets is equal to capital plus liability. Okay, so the accounting equation would tell us, as I have it here, assets is equal to capital plus liability. If we want to find capital, then we transpose, and it now becomes capital is equal to assets minus liabilities. If we want to find liabilities, it is assets. Liabilities is equal to assets minus capital. Now our question asks us, which of the following statement is incorrect? So option A, capital is equal to assets minus liability. So if we go to our formula here, we can see capital is equal to assets minus liability. So option A would be correct. Option B, assets plus liabilities equal capital. Go to our formula here. Assets is equal to capital plus liability. And here we have assets plus liabilities equal capital. So option B seems to be out. Let's look at option C before we actually select the correct response. Option C, liabilities is equal to assets minus capital. If we go here, we realize here that liabilities is actually equal to assets minus capital. Final option, capital plus liabilities equal assets. So when we look at all four options, we realize that the option that is out would be option B. Option B would be incorrect because it states that assets assets plus liabilities equal capital, when the accounting equation tells us that in order to find capital, it is assets minus liability. Good. So now we move to question 2. All of the following are assets except. Now, while we work this multiple choice question, feel free to pause the video at any time or go back to look at a question and to answer the question, all right? Now, we're looking at question 2. All the following are assets except. Now, we know that assets are the resources that the business own. They belong to the business. So I want to look at the resources that belong to the business. So here we have A, cash in hand. We have B, land. We have C, stock. And then we have D, creditors. So by way of elimination, the only option here that would be out would be creditors, because we know that creditors or those persons who the business owe. They are liability. It means that the business would have owe these persons, owe your creditor for maybe resources supplied to the business. So for question 2, our answer here would be D. Then we move on to question 3. Which of the following does not usually carry a debit balance? So to answer this question, we want to look at the 5 types of accounts. Do you remember the five types of accounts? Sorry. Now I want to give you an acronym that you can use to remember the 5 types of accounts. CLEAR. Clear. So anytime you're doing accounting and you want to remember the 5 types of accounts, just remember the word clear. So C, capital. L, liability. E, expenses. A, assets. R, revenue. Now, once we know the types of accounts and we know the balance that the account carries, then we are on our way to answering this question. So we know that capital carries a credit balance. They are giver accounts. So usually your giver accounts, they carry credit balance. Your receiving accounts, they usually carries a debit balance. Liabilities, credit balance. Expenses, debit balances. Assets, debit balances. Revenue, credit balances. So let's look at these accounts here and to determine which of these are assets, liabilities, expenses maybe, and revenue. So motor vehicle. Then and there we know that motor vehicle is an asset account. Therefore, it would carry a debit balance. Debtors. Your debtors, they are asset. So therefore, it carries a debit balance. Mortgage. Mortgage is a liability, something that you have to pay back. So your mortgage usually carries a credit balance. D. Bank. Bank, it's an asset to the business, and assets carry a debit balance. So our answer here would be C. All right, now we want to move to our next question, question 4. In what order should assets be listed in the balance sheet? Now we know that in the balance sheet, your assets are listed. So before we talk about the order in which assets are listed, let's look at the options. So we have liquidity, we have permanency, we have ascending, and we have descending. Now, by way of elimination, we know that ascending and descending have to do with numbers, the arranging of numbers, either from smaller to larger or larger to smaller. Now, so C and D would be out. So our 2 options here would be liquidity and permanency. Now, liquidity refers to how quick an asset can readily turns into cash, while permanency refers to the longevity of the assets. Now, usually the assets in on the balance sheets, they are arranged in order of permanency as it relates to those assets that are bought to be used in the business. They are there to stay for a longer period of time, as opposed to liquidity, those assets that can easily turn into the cash. So assets on the balance sheets are arranged in order of permanency. So our answer here would be B. Then we move to question 5. All right, I want to push this down to our next page so we can see the questions and the options all at once. Now, which of the following statement is correct? Now, basically, this question is asking you to find working capital. If you look at each options, basically they want to know if you know how to find the working capital. What is working capital again? Right. So working capital is the capital of a business which is used in its day-to-day operation. And to find working capital, so let's put it here. To calculate or to find working capital, it is current assets minus current liabilities. So we want to look at our options. So current assets minus current liabilities would give us our working capital. So let's look at the options that we have. So the first option is current assets plus current liabilities. So we know that this would be out. Current assets plus current liabilities, we know that this would be out. Sorry, so let's strike through that. The next one says current assets plus fixed assets equal working capital. This would be out as well. Strike through that. Current assets minus current liabilities. So this option C, seems more like it. But let's look at option D. Current assets minus fixed assets. So option D is also out. So then our answer here would be C. Very good. So let's move to question 6. Question 6. A proprietor wins a motor van valued at $10,000 and decides to put it into the business. Which of the following is the correct entry? So here we're asked to go back to double entry, and we know that double entry states that for every debit you must have a corresponding credit and vice versa. Now we also know that double entry states that two or more accounts are affected. So when you have a transaction, two or more accounts are affected in that transaction. So let's read the question again. So a proprietor wins a motor van. So here we have one account, so we want to underline it, valued at $10,000 and decided to put it into the business. So when the proprietor put resources into the business, the other account here would be known as the capital. Now, remember, any account that is given, we usually debit. Any account that is receiving, we usually credit. So the account that is the giver account, we credit. The receiving account, we debit. So if we should look at the options now. So the proprietor wins a motor van valued at $10,000 and put it into the business. All right. So now the two accounts are motor van and capital. Which account is receiving? Which account is giving? In this case, capital is giving, motor van is receiving. So we want to debit the motor van account. So we're going to look for the options that start with debit motor van account. So we have option B that says debit motor van account. And we also have option D that says debit motor van account. So basically, the two options we have here so far are B and D, but let's look at which option is correct. So B, debit motor vehicle account, credit capital, while D, debit motor vehicle account, credit joins. So clearly option D would be out because the two accounts that we are working with is the motor vehicle account, and the capital account. So our answer here would be option B. All right. So very good. All right. So let's move to our next question. Question 7. The working capital of P. Young and Sons is $15,500 and current assets is $16,500. What is the total current liabilities? First thing we want to remember, what is the accounting equation? What does it tell us again? A equal C plus L. So to find asset, it is capital plus liability. In this case, we want to find what? Liabilities. So we're going to transpose the formula to make it be L is equal to A minus C. Now, A, assets. How much is the asset? So the working capital of P. Young and Sons is $15,500 and current assets is $16,500. So our current asset in this case is, so let's put in that amount, $16,000 sorry, 16,500. Want it directly here. 16,500, and we want to take away, so let's line it up a bit. So 16,500, and we want to take away the capital of 15,500. So then our liabilities would be 1,000. So here our answer for question 7 would be A. So we want to move along to question 8. Let's bring it up because I want you to be able to look at the question and the responses all at once. So question 8. If the following list of assets found on the balance sheet of a retailer were to be arranged in order of liquidity, the sequence would be, so let's highlight liquidity. Now, remember, I think it was question 3 or so when I speak of liquidity, I made mention that it is the ease at which an asset can readily turn into cash. So when we talk of liquidity or the liquidity of an asset, it's how fast that asset can turn into cash. So let's look at our option. We have option A, cash, fixtures, debtors, bank, building, motor van, right? Then we have option B, cash, bank, debtors, fixtures, motor van, motor vehicle. So we have option C. So we're looking at all the options first. Cash, bank, fixtures, debtors, motor van, and building. Then we have option D, starting with motor van, building, bank, fixtures, cash, and debtors. So if we look at option D, starting with option D, we realize that motor van here wouldn't be the most liquid asset. So for it to be liquid, it must start with cash, because cash in hand is the most liquid. You can use it to do whatever you want it to do. So option D would be out because it would have been start with not the most basically here we have it starting with an asset that was bought to be used in the business, really a permanent asset, a fixed asset. So we want to take that option out. Then C, cash, bank, fixtures. So we want to look at fixtures and debtors, and we want to see which of the two assets here is the most liquid. So if you compare fixtures and debtors, you would say that your debtors would be more liquid than your fixtures, because your debtors can easily turn into cash as opposed to your fixtures. So in this case, option C would also be out. So we go to B now. We have cash referring to your cash in hand. So you use up the cash that you have in your cash tilt or your cash register. Then quickly you move to your bank account. You can pull some money from your bank account to do whatever you'd want it to do. Quickly you call on your debtors. You have some debtors out there having some money for you. Call on them and you get some money to do whatever. Then you start to sell out your fixtures. Move from your fixtures to your motor van. Get rid of your motor van. Then the most permanent asset that you have here would be the building. That would be the hardest to turn into cash, because opposingly, in truth and in fact, you'd have to find somebody who want this building to purchase before you can actually get cash or rent or so on. So B here would be the most suitable answer for the order of liquidity. Then you want to move to question 9. Alright, so question 9 asks us quickly so basically you get a table with some fixed assets, some balance. You have a balance for fixed assets, stock, cash, debtors, creditors. So you have some balances here for Mr. M. King. Now you're asked now to find his capital. What is his capital? So basically you have assets and you have liabilities. So you're going to find capital. So if you have assets and you have liabilities, then you can find capital, because assets minus liabilities give you capital. So we're going to do some calculation. So work along with me. So you have fixed assets of 3,050 here, fixed asset of 3,050. Then you're going to add closing stock of 1,280. So 3,050 plus 1,280, that should give you 4,330. Good. Then you're going to add cash of 1,290. So 4,330 and 1,290 should give you 5,620. Then you're going to add your debtor of 220, and that will give you a total assets of 5,840. So your fixed assets and your current assets would give you a total assets of 5,840. Then from that 5,840, you're going to take the liability of 260, and that is going to give you capital of 5,580. So your option here would be option D. Option D. So we want to look at question 10. And question 10 speaks to Ram Singh purchased goods value at $500 on credit. He settled his bill within the grace period and received a 10% cash discount. How did he pay for the goods? So let's look at the question. So Ram Singh received goods value at $500 on credit, right? He settled his bill within the grace period, so he would have paid within the time given for him to make payments and received 10% cash discount. So how much did he pay? So if he was supposed to pay 500, he paid on time, and we're giving him a discount of 10%. So what we're going to do is to find 10% of the 500. So 10% of 500 would give us 50. So that means that he would get $50 as a discount. So now you're going to take that $50 from the 500, and then we realize that once you take 50 from the 500, then he is supposed to pay $50. So some common mistake that person would make is that they find the 10% of the 500 and then they would choose option A, which is $50. But $50 would have mean that that's a discount that is given. So of the 500, we're giving him $50 discount, so he actually should pay us $450. Okay, everyone, so this is the end of set A, Principles of Accounts, multiple choice question and solution. However, I will be uploading several other videos, different sets with at least 10 questions. I might increase it to 15 or 20. So be sure to look out for my other videos with accounting questions and solution. That's multiple choice so far. I will also be working some paper 2 questions as well.